Good morning to you both. Brent, I'll start with you. I want to get your reaction to those comments and how it jives, I guess, with what you've been saying, your investment case, where the markets right now are concerned.
Yeah, I mean, I think this is the overarching desire of the Fed. They certainly want to bring inflation down, but they don't want to cross the line into doing so too much. They actually cause a recession. And so I get comments all the time about this being a soft landing, and I think that's the wrong question to ask me. I think the question is, which side is the Fed going to err on in the bumpy landing? Are they going to err on the side of causing a recession and going too far? Or are they going to err on the side of actually getting inflation to roll over, but not crossing that line? Because the Fed certainly does not want to cause a recession. I don't think it's politically palatable. I don't think it's societally palatable. And so I think in the time between now and then, yes, we will eventually have a recession. But between the time between now and then, which could be a couple years off in the future, I still think you want to own stocks. I still think you want to be in things that are cheaper and actually, quite frankly, have faster earnings growth right now.
Katerina, I'll put the same question to you. How do you see it?
Well, Morgan, I agree with Brent. This is certainly a very challenging environment for investors, and we have to look at everything from the inflation perspective that is affecting both the profit margins and the demand. And of course, Fed has to be acting aggressively. And more than ever before, we have to look at the earnings revisions and at the valuations. And investors have to remember that the strategies that worked so well for them over the last couple of years might no longer work. So we have to break out a completely different playbook. Now, what this means is the pressure of higher rates are affecting bonds, but also the fact that we're expecting the earnings revisions will require us to pivot to defensive strategies, to defensive positioning. And the sectors that we currently like are things like healthcare, staples, REITs, utilities. So it is very important to look at everything from the yield perspective because we're no longer really safe in the strategies that worked so well before.
So Brent, where would you be advising investors to be putting their money to work right now as well? Because if it is going to be a bumpy landing, and if maybe we don't get a recession now, but it could be a year or a couple years away, depending on how all of this plays out. I mean, there's so many uncertainties here. I guess, how are you advising clients?
Sure. I've mentioned over and over on this show before, we want to be in things that are cheaper. And so certainly things like large cap growth, things like hope streams, themes, and meme stocks, you've really seen those harmed. But what you haven't seen harmed is value stocks. Small cap stocks, especially the ones that are higher quality, are doing quite well also, and they're quite a bit cheaper. Look, most people kind of invest along an economic cycle, and that is certainly getting longer in the tooth. We are going to have a recession at some point. But I think the valuation is so compelling in some of these small caps and some of these value stocks that that's where you want to remain, even though the calendar is clicking towards moving towards quality and large. I just think right now there is still so much opportunity given the valuation differences in those segments of the market.